Today, hot spending says 50 basis points in October. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and private news with a distinctively Australian flavour. Another signal today from the data shows that households continue to spend strongly as the Australian retail turnover rose 0.6% in August 2022, according to the retail trade figures released today by the ABS. The August increase was the 8th consecutive rise and follows a 1.3% rise in July 2022 and a 0.2% rise in June 2022. Another reason why a 0.5% hike in the cash rate in October is becoming ever more likely. Indeed, RBC Capital Markets has upgraded its forecast for next month's Reserve Bank cash rate to 0.5% from 0.25 percentage points, citing a global wave of central bank policy tightening with more to follow. If RBC is correct, that would take the cash rate to 2.85%. We continue to think that it will be a close call between a 25 basis points or a 50 basis points hike at the upcoming 4th of October board meeting, said Su Lin Ong, RBC chief economist for Australia and New Zealand. However, recent global developments, including in the UK since late last week, tip the odds in favour of another 50 basis point move next week. The economist said a falling Australian dollar and an extremely tight labour market at home support an outsized interest rate increase in October. At the same time, RBC drastically lifted the interest rate outlook in Europe, the US and Canada. It's now anticipating the European Central Bank to raise its benchmark rate by another 0.75 percentage points in October to a terminal rate of 2.5% from only 1.5% in its previous forecast, and RBC expects both the Federal Reserve and the Bank of Canada to raise their benchmark rates to a peak of 4%, with the risk that they will go higher. For Australia, Ms Ong forecasts a peak rate of 3.35% by December, but of course the markets are calling out rates above 4% through next year and beyond. Interest rate hikes still look to be having little impact on retail so far though. Since gains have slowed a touch since the RBA began lifting the cash rate in May, they're still averaging a solid 0.6 to 0.7% per month. That compares to an average monthly gain of 1.5% in the first 4 months of the year, but that was a period when post-Delta reopening tailwinds still look to have been a factor. Overall, the August update suggests the RBA's tightening has yet really to impact, but higher retail prices are also concealing a more pronounced softening in retail sales volumes. The extent of this effect is going to remain uncertain until we get the full third quarter detail, and the third quarter CPI out late October will also provide some additional clues. However, at this stage, the mix suggests retail volumes are still ticking over at an above-trend pace in the quarter. The ABS said this month's rise was driven by the combined increase in food-related industries, with cafes, restaurants and takeaway food services up 1.3% and food retailing up 1.1%. While households continue to spend, non-food industry results were mixed and only contributed a small amount to the total rise in retail turnover. The ABS retail release now comes actually in 2 stages. This preliminary release with limited detail and a final estimate that may see some revisions and provides perhaps more additional data later. The limited detail available for August shows that department stores rose by 2.8% to a new record level, while household goods retailing has its largest rise since March 2022, up 2.6%, having recorded 3 falls in the previous 4 months. Other retailing fell for the first time following 5 consecutive monthly rises, down 2.5%, and is the largest fall in other retailing this year. Clothing, footwear, and personal accessory retailing also recorded its largest fall this year, down 2.3% in August, following 2 consecutive rises. The rise is centred on a solid 1.1% monthly gain for the large basic food store type and a 1.3% month rise for cafes and restaurants. Performance is much more mixed for non-food categories, with another strong rise for department stores, up 2.8%, and a surprise rebound for household goods, up 2.6% over the month, offset by sharp reversals for clothing and footwear, down 2.3%, and other retail, down 2.5%. And by state, retailers reported strong gains in New South Wales at 1.5% and South Australia at 1.3%, but flat conditions in many other states. Turnover rose in Tasmania, up 2.2%, the ACT at 1.9%, New South Wales at 1.5%, South Australia 1.3%, and Victoria up 0.1%. Two states recorded falls, with Western Australia down 0.2% and Queensland down 0.1%. The Northern Territory remained relatively unchanged. So the conclusion from all this is that there's still a lot of heat in the economy, despite significant falls still in consumer confidence. The latest Roe Morgan was slightly stronger, but only just slightly. And the momentum ahead looks to be easing as interest rates bite. Remember, of course, there is a lag of 2 to 3 months between the RBA announced rate rises and them really hitting wallets. So it's going to be another quarter or so before we really see what is going on. And because of that, I'm pretty convinced the RBA will go 0.5% in October. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.